SPDas. The trading floor is yours.
Okay, thank you, Igor. And once again, welcome back to the London Times. Here it is about 5, yes, 2 minutes past 5 a.m. Eastern. And as far as the price action is concerned, we've taken profits. Partial profits have been pushed. We are we are still in the long mode. And let's get started with the Euro wave counts with the daily chart first. Uh, there is a feeling where Euro could still produce a corrective decline and give us yet another opportunity to go long, because if it were to break the ceiling, it would have done by now. If it were to break the ceiling, it would have done by now. On the long side, with the impulse of correct of the minor degree, uh, 1, 2, 3, 4, 5 up there on your screens, with corrective wave ABC also in place, and wave 1 and 2, and series of ones and twos are now seen. Ideally, what we need to keep in mind as the larger picture is euro is expected to unfold. Not only euro, it is also pound on the long side, dollar JPY on the south side. So most of the currency majors are now poised for a multi-week rally or decline of the magnitude of 5 waves. All right. Now, if you look at the hourly chart, the reason why we've taken partial profits is the diverging scenario. But before that, we got wave 1 of a minute degree up there, followed by wave 2 of a minute degree, and then uh, once again, wave 1 and wave 2. And the third of third wave is kind of unfolding. Now, if you look at the peak when it was around 440, few hours back, just around the late Asia session, the RSI was lagging behind, and that was the reason why we would take partial profits, or suggest at least take some money off the desk, leaving room for a corrective decline. That's what I think it would happen. The next part could be something like this, maybe a slight decline. Fibonacci 61.8% of the current rally. That one between 316 and 427, followed by a push again on the larger degree trend, toward the larger degree trend. So trading point of view, you might want to keep your limit orders somewhere around 360, yes, 360 or 350, 60. That's what we will also push through after the session on the Telegram channel. And a fresh limit order to buy should be around 350.60 with a stop loss around 1.02, a potential target around 1.0750. That does not change for now. We uh, we are not going to change those figures, 750 and 1.11. The only thing we try and do is churn a bit, so that we are not sitting idle when the retracement is there. For example, prices rallied yesterday during the New York session, just after the New York session, and we made money. We took some partial profits. Again, it gave us an opportunity just around the Tokyo Sydney overlap. After a few hours, around mid Asia session, it was already giving us 55 pips. We just said thank you very much, and now we are waiting for yet another decline to get partial long. So the idea is to keep churning so that we get maximum benefit of each small wave. But there is a disadvantage of this strategy as well. I would be very honest. Supposing if we are waiting for a corrective decline to uh, to give us an entry around 1.0350, and uh, and it doesn't come, all right. So it goes on one straight line towards 750, and if you're not holding the equity or even partial equity, we actually tend to miss the entire rally. That's why I try my best to keep at least one position open. Uh, at this point in time, we are trying to open a fresh position around 1.06, 0360 or 5060 level. So if possible, keep at least partial open, and then you can capitalize on the entire rally, because we know what is predominantly or most likely going to happen. Not predominantly, it's not the correct word actually. More probably going to happen is prices pushing towards 1.0750. All right, sir. So that is the story for Euro USD as of now, and let's pick up the dollar index. Once again, the same strategy could be applied in the dollar index as well. The larger degree trend is down without much question or doubt, and also this consolidation. I mean, it's now beginning to give me a feeling that are we into a triangle consolidation of wave two? That could possibly be actually when we look at three up, a possible three down, which looks like an impulse, and yet another three up, A, B, C. That would be wave C and D. So it's quite a bit of consolidation left if the triangle mode is on. But it's no point in speculating, as corrective waves are, I always keep on saying, they are the most difficult ones to identify. So personal level, I don't really try or emphasize to identify which pattern is unfolding, because it's next to impossible to find out which pattern is unfolding unless it presents itself. And for example, if a triangle is unfolding, we need at least three waves, at least three waves. And you never know, even after three waves, it could be a running flag or something. So, it's really, really difficult to identify which corrective wave is unfolding. In case of motive wave, it's very easy because there are only three types of motive waves. One is the impulse, the second extension, the third one is a diagonal, right? A truncation and a diagonal. So very limited spaces there on the motive side. On the corrective side, I got quite a number of combinations. So we're trying to do the best and find out what will be unfolding. If we look at the potential of which should be in place at 108.47, then we are now looking for a corrective rally back towards 108.14 or 15, keeping the recent drop or recent boundary intact. Maybe we are working on a wave two of a lower degree yet, and if that is correctly done, then we are pushing towards 108, 1085, which is the 61.8%. All right. Uh, Now, trading point of view, if you have taken profits, we have already done that. We will just after the session we will have a limit order in place again at 108.06, and the euro 1.03 5060 with a stop around 109.85. Ideally, I would go in place at 110 for now. but technically it is going to be correct if you place at 109.85. Now let's look at the RSI. There is a bit of divergence, bullish divergence. Price is dropping lower, but the RSI not really carrying through the fresh lows. So there is a bit of divergence, and that's why this arrow has been shown. Possibly dollar index is pushing through 108 uh, 510 zone before the turnaround lower. All right. The targets are the targets remain intact towards 105, 104, 85 going forward. I mean, these supports are set to be taken out. The first one is around 105.40. It is followed by 103, and then it's followed by 900. These supports should be ideally taken one after the other. And there is an interesting game of support and resistances when you see that particular support being taken out here. So bears score a point and they pull back, and a lower high is created, and now they're actually behind that support. So the next target should be around 105.60 at least, and it seems to be right on track. The only thing is that we should be at least partially into the trade to take maximum advantage. All right. Pound. Okay, pound. I'm personally not of a great holder of pound because of the volatility. So what I do personally is any form of profits around 50 to 80 points intraday or very short term. That's it. I just say it's okay. I'll wait for a pullback now. All right. And the next limit order in pound is also set up nicely around 24.20. So we'll be setting up that in a while after the session is over. What we are seeing right now in pound is again the same as Euro USD. It's a third wave at a lower degree being carved out. We've got the first wave and then the second wave, corrective ABC. And once again, we've got wave one and wave two. Possibly again, we've got wave one. Now we are waiting for a wave to decline lower. All right. So it could be the third wave, uh, just just beginning to unfold for pound. And within no time, we are already 25. We all started around this price. I remember specifically on 11th of February, around the same session, London times. All right, and we are again 13th of Feb, London times, almost around the London times. So if you look at it has moved how many points? I mean, we were 23.35. It's already gone 200 pips, almost 200 pips, 23 to 25. So just in 2 days, this guy can move like crazy. The only thing is that we've got to hold on and keep stop loss around 1.2250. Or I would go rather better, 1.21 would be the best in pound. This guy is quite a bit volatile at times. All right. So the larger degree picture doesn't change at all. I think it's been a while we have identified the larger wave counts. I could just change the visibility here. Let's take it off the daily. Okay. Now we've got wave one, expanded flat wave two, wave 3, 4, and 5 at a minor degree. This visibility is a good function actually. You don't let the noise of one time frame spread into the other one. And we got A, B, and C. But this structure is not as simple as it looks like an ABC. In fact, I think I would go further and take this off. It would be like a WXY for me. It's not for me, but charts are telling us a story that the W and the X and Y. WXY is also a corrective pattern. We might want to touch that sometime in theory class. Okay, so WXY and WXY is a 333 wave pattern. So it's a combination of all the corrective patterns. I mean, two corrective patterns or three corrective patterns coming back to back makes a combination. But it's a three-wave corrective pattern, WXY, okay? And that also seems complete around 11th of Jan or 9th of Jan. So that's the daily picture. Larger degree trend up. And what we are now seeing is corrective wave. I think a corrective wave should be materializing on the shorter time frame because it looks like an ABC to me. See, that rally, this rally, is a motive structure. It's not necessarily an impulse though, but it's a motive structure, and that wave would be corrected in this manner. All right, so a Gartley should be in formation. Okay, we should be seeing a Gartley formed, and once that is completed, we'll again we can again start higher or resume higher. So enough of wave escalation and de-escalation. For pound, it's a clear buy on drops or buy on dips towards 2440, and with a stop around 2250, the targeting around 2850 and 1.0320. Okay, gold. I think we haven't seen gold yet this session. So if you look at the structure, because I'm bringing up the 15 minutes time frame with a reason, the daily chart has pointed out potential top and reversal. We need to see a follow through, and that is only possible if we analyze the 15 minutes time frame or an hourly chart. Because I bring up the candlestick once again. We've got a spinning top or a shooting star, sorry. I usually get confused with the names. It's a shooting star, and now it's correcting uh, possibly lower degree wave 2 before that decline. We are still holding on to the ABC expanded flat structure possibility. And now it's going to test us. It's going to test our patience as it always does. But the only thing which I see constructive is there is a five wave decline on the 15 minutes time frame. It's not yet reflected on the hourly chart, but that's fine. It all begins with a smaller time frame. So gold, we are holding a couple of positions. We still want to add, but when it turns, actually not right at this point in time, but that's the five wave structure: wave one, two, three, triangle A B C D E, wave four and five. If you look at the right hand side, it could be a 3-3-5 structure unfolding. That is a flat 3-3-5. So that's an ABC three waves, again ABC three waves, and another five wave structure could be one expanded flat two, or maybe one and two. That is three. You see slide sideways four going on right now. It may dig a bit more sideways and maybe one more thrust. That completes the five wave rally. So this C would actually go and push a bit higher towards 29, 24, 25. All right. And this B we can shift here. So we're looking for an ABC to complete somewhere around the 78%, and that should produce a swift reversal lower. I don't know if we're also beginning to see the diverging scenarios here when RSI is trading at 70, but the previous peak is at 77. Even if it pushes higher to a fresh level in 29.20, that divergence should ideally hold, and which would enable us to take one more shot in gold. Right, so that's the structure in gold, which is a sell on a rally somewhere around. We've already sold at 29, 10, 12 according to the limit orders. It's already triggered. But maybe if you want to add, you might want to add around the 29.20, the stop around 29.55, targeting lower. Here's the target price. 2616 and 2750 or 330. That's exactly where the previous wave 4 of one lesser degree completed. All right. So wait for, uh, let's say wait for a few more hours before gold is kind of topping out, and the structure on a daily chart is looking quite constructive for the base. The ideal thing is that it should remain below 29.42, not even 55. 55 is the stop loss we proposed, but 42 is the bottom line. Bulls should not be able to break that 42. All right. For base to remain in control. Okay. We are not again suggesting Bitcoin trades because the price action was 97 last time. And you know what? This is 96, so it could be a first short-term wave two actually. Let me point out. All right. Okay, we look at the structure here. For the first time after several days, I think there is something constructive in the terms of a motive wave. We've got to change the degree to a minute. and I think it's a 61.8% Fibonacci retracements as well from where prices are looking to bounce. All right, that's just about 61.8%. I mean, I think there could be one more decline towards 95 something before it begins to battle on the north side. So trading point of view, after quite a number of days, I think we've got an impulse followed by a corrective decline, three ways. I think it's a good point to buy around this level, 96,000, 96,169. We enter buying. The stop loss can be kept just below that to reduce risk. We don't need to go all the way towards the 89 level. I think that low at around 94, we can keep just below that 94 mark. The 94 stop, 96 is the long, and here's the target. It is showing around the 100,000 mark. So that's the first trade in Bitcoin after so many days. 97, 96 long, 94 stop, so 3,000 points of risk versus 6,000 points of reward. Not exactly 6,000, but 4,000. So it's at least 1.1 is to 1.25 actually. All right. So that's the trade setup for Bitcoin on the long side for the first time in the past few weeks actually. But the stop loss strictly around 94,000, please. Okay. Let's bring this session to a pause now, and we'll be back again in a few hours to touch base or pick up in the New York session. Until that time, once again, thank you for joining in, and we'll be happy to hand over to Igor. Igor, back to you. Thank you.
SPDas, thank you very much. Always a pleasure.
Always a pleasure too as well. Thank you.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com. ForexLens gives you the edge.